If you've heard about RILAs and you felt either intrigued or confused, you're not alone. In this episode, I'm going to explain what a registered index-linked annuity is, a RILA, so that you can understand where they fit and where they don't, so you can make the best decision based on your situation. People often share that they are overwhelmed. And what I find happens is when someone is just given a product option and they don't know how it fits into their bigger picture, it's normal to be overwhelmed. Or they might even feel pressured that they're being sold something as compared to something being strategically placed in their portfolio based on their plan. Now, I want to give you a couple of $1 million nuggets right out of the money course that we're creating. And if you want to give us insight on that course, you can go to themillionaireinsider.com/MCI and just give us feedback on what you want to see in that course. But a couple of nuggets that we are providing in that is that you got to, first of all, have a plan and clarity of knowing where you're headed before you start purchasing anything. There's really no single product that's good or bad on its own. It's how does it fit into your overall strategy and what are you trying to accomplish? The right question is always, who is this for? Why are they purchasing it? And what is the situation and circumstance? Once you know those answers, then you can make a much more informed decision. So in this episode, you're going to learn what a RILA is and how it differs from other annuities, how buffers and floors work in real-world market scenarios, the trade-off between downside protection and upside limits, the types of investors RILAs often are a good fit for, questions you've got to ask before considering one, and then how a RILA fits into your broader retirement income plan. All those things are critical. Today's free resource is our retirement readiness quiz. You can go to themillionaireinsider.com/RRQ. This quiz helps you identify the retirement stage, really the pre-retirement stage you're in, so that you can take the next best step to ensure a successful retirement. We create it for our listeners who want to know where they actually stand. It's a low-pressure way to identify gaps before making major decisions. And we give you resources based on where you are. Now, if you are ready to schedule a meeting and you need help, you can go to themillionaireinsider.com/5Q. There, you're going to answer 5 questions so we can help to determine if we can support you or what would be the best course to support you. So again, themillionaireinsider.com/5Q. For today's show notes, you can go to themillionaireinsider.com/152. The Millionaire Insider copyrights all materials and intellectual property. This information is for educational purposes only. It is not intended to replace any advisor or specialist or to provide any investment, financial, tax, retirement planning, or healthcare advice. By accessing this content, you agree to hold millionaireseries.com and its affiliates harmless for results achieved or not achieved. So let's dive in. So what is a RILA? It's a type of annuity tied to a market index, say like the S&P 500. It offers limited downside protection and limited upside potential. So you've got cap on the top and the bottom. It's not a fixed annuity or a variable annuity or a fixed indexed annuity. Common misconceptions are that it's linked to the market. Now, that doesn't mean the same thing as being invested in the market. It is linked to an index that represents the market, but you're not going to have the same level of risk or potential upside or potential loss that you do in the market. You also want to get that you are trading some growth potential for some protection, meaning you could lose money on it. There is some protection, but you also, if depending on how the market adjusts, you could have a loss on your portfolio. So let's look at how the buffers and floors really work. Look at some real world examples. So a buffer absorbs a portion of the market losses. So for example, you could choose a buffer of 10% or 20% or 30%. And how that works is if you choose a buffer of say 20% and the market drops by 22%, you would lose 2%. If you choose a 30% buffer and the market drops by 35%, you would lose 5%. The floor sets a maximum loss, meaning you can't lose more than that amount. So let's talk about what happens in a modest market drop. you probably won't lose any money, right? Because if it's modest, let's say it's 5% and you have a 10% buffer, you're going to be fine. But what happens in a severe market drop? You could lose money. So if your floor is 10%, as I mentioned before, market drops by 12%, you lose 2. But what happens if it's a major market drop or a major market recovery? This is what you got to get, is that if the market drops, let's say by 35% and you have a 30% floor, all right, so you've lost 5%. But if it regains money back, meaning the market comes back within that year period that your buffer and floor are going to be credited or debited, then you may not lose any money. And so you have to just be aware that there is a lot of different scenarios where, yes, you could lose money at a certain point of the year, but you may not. And that's what a lot of people don't understand. The other thing you can do with RILAs, which we like to do, is you can lock in the rate sooner. So, I can't really talk returns without giving you a lot more detail, but I'll just say this year, we have locked in several RILAs because they've almost hit their cap. And so if you can hit your cap, let's say your cap is 10%. I don't care if it's 8%, 10%, whatever it is. So let's just say it's 10% and the RILA is up 8.6 or 9%. Why not lock it in? Because then the following month, it's going to be reset to a different number. So again, you got to just make sure that you're working with a fiduciary who has your best interest at heart and that you understand all the different options before you go in. So it's important to understand that those protections apply only to defined periods. Outcomes are going to depend when you enter and when you exit. And protection is not the same as a guarantee, meaning no loss, like you get with a fixed annuity or an indexed annuity. So again, you've got to make sure that it's appropriate for you. I had a client that I felt a RILA would have been perfect for, but she is so risk adverse. She does not want to worry about losing any money. So it's like, well, then it's not an option because you could lose money. So again, the key of any good advisor is they are going to look at your picture, give you recommendations, and then based on how you feel, help you make the best choice. My concern always is when somebody doesn't have a portion of their portfolio in something that's growth oriented, they're not keeping pace with inflation. And so $1 today is not going to be worth the same as $1 in 20 or 30 or 40 years. Now, in this particular situation, she has a lot more income than she needs. So it shouldn't be a problem. But still, I do like to see people have some hedge against inflation. All right, number 3, the trade-off, protection versus growth. Now, insurance companies offer RILAs and they have different indices that you can choose from. I personally typically like the cap and the trigger. You got to look at it. Those are just ones that I like. And the reason I like the cap is because depending again how rates are, it means that if the indice you're invested in does this amount or more, you're going to get that amount. Now with the trigger, it means that if the market's positive at all, you get this amount. So I just like to hedge against both of those. But I just want to reiterate, it depends on your situation and where you feel the most comfortable. That's the bottom line. Now, many people feel safer when they have guardrails and they're comfortable giving up some upside to ensure protection on the downside. And I personally think that having a portion of your money in something that has some protection is a smart move. I mean, let's face it, the market's at an all-time high. There are a lot of uncertainties. There are a lot of concerns. What's happening with the dollar? What's happening just on an international scale, even concerns about some of the other matters that are going to have an impact on the economy. So we've got to be paying attention to that. The most important thing is that you have a portfolio that allows you to not worry, to be able to sleep at night, and to be able to feel confident in the decisions you're making, whether it's a RILA or any other product. Long-term retirement success depends on both an income element and a growth element. And one of the most important things you've got to do when you're creating your plan is to look at where is the guaranteed income to replace your paycheck going to come from. Once you know that and you have your need-based expenses, housing, utilities, taxes, insurance covered, then you can focus more in on the growth-oriented assets. It's important to remember that there's no free lunch in any financial product, and every benefit comes with a cost. So you just got to be aware of it. And a lot of people, especially women, are willing to pay that. Even though I will say I have a lot of men who have really enjoyed RILAs. So I guess that's not fair to say, but it's amazing to me how many men who are smart, men who've been very successful in their career, many of them are in some element on the financial world, and they really like an option to have some protection. So again, you've got to just look at your situation and determine what works for you. So let's look at who a RILA may work for and when it may not. So when it may work is a person who is more in a pre-retirement, say 50 plus, or they're retired. And I've seen people invest in them and love them between ages probably 50 and 70. And there is an age cap, and I think it's 80. It depends on the company, but don't quote me on that. You'll have to look at the particular carrier to identify that. But another person who it may work for is somebody who's highly sensitive to market losses. You can't sleep at night. You're freaking out. You're worried. Or you're looking for partial protection, but not full guarantees. And another big issue is that you have enough liquidity and you want to use the RILA for growth or to hedge against inflation. Those could be definite uses where it makes sense. Situations where I'd caution you to reconsider it is when you're making a decision without a plan. So if you're just going in and buying one and you don't really have a plan, I don't think that's a good idea for any product. Younger investors, there are exceptions to this. And that's when somebody inherits money or they want a forced retirement plan because there's a 10% penalty on the gains of a RILA before age 59 and a half. And I have seen people as young as in their late 30s, early 40s actually invest in RILAs just because they like having this money over there that they're forced to use for retirement. So again, you got to look at what works for you, but that has been exceptions to the rule of young investors investing in a RILA. Those who don't fully understand the trade-offs, let's face it, if you don't understand why you're purchasing something, you should not be purchasing it. And you should demand to understand how it fits into your big picture. And also make sure it's coordinated with your bigger picture plan and what you want to accomplish. That's critical. Suitability depends on your entire financial picture, not just your risk tolerance. So again, something to just consider and be aware of. All right, let's now look at financial confidence, clarity, and stress. It's normal to lack confidence and experience stress and even fear when you don't have a plan. I mean, let's face it, if you don't know where you're going, I can see how it could be anxiety producing. You wouldn't get on a plane. Most people wouldn't get on a plane and say, I don't know where I'm going. And you end up, some war-torn country. You want to know where you're going. Same thing's true and probably even more important in your financial plan. But if you don't have a financial or retirement plan, I really encourage you to start with the financial checkup. You can go to themillionaireinsider.com/FC. This is going to give you direction on your next best step to creating an actual plan that works for you so that you can then start making decisions on where you should put your money. One of the other things I see a lot of times is when people don't know where a product fits or what it's supposed to do, their level of stress and fear and worry goes up. And that's normal. And another reason is they don't know how to evaluate results. So those are some things that can really impact the level of stress you have and really undermine your confidence. When a product is aligned with your plan and your strategy, it should reduce stress and fear. Confidence comes from understanding, not owning the right thing. I hope you really get that because I see a lot of times people make investment decisions and they're not even thinking that through. All right, the questions you must ask before considering a RILA. And I just encourage you to consider these and even ask them if you're planning on purchasing one. What role would this play in my overall retirement income plan? Now, if you don't have one, that's your first clue that you should run. If you're not using a fiduciary, you need to be using a fiduciary. A fiduciary has to act in your best interest. I think it's mandatory. What problem is this RILA going to solve? What am I giving up in exchange for the protection? This is where they should talk about how much you can earn because you cannot earn as much in a RILA as you can in the market. Yeah, granted, you're taking on more risk and you have more potential for losing money, but that is something you got to understand. And the person selling it to you needs to understand that. How does this product interact with Social Security, pension, and other income sources? You want to make sure you're clear on that. What happens if market conditions change or I need my money earlier than anticipated? Do they have a plan for that? If you don't understand why you own a product or how it works, you've got to take a step back, reevaluate, review your plan or create your plan, and then move forward. So critical. All right, in closing, I just want to recap. RILAs, as literally like every other product, are neither good nor bad. There are specific tools for specific situations, and ideally, they are part of your bigger picture plan. And the first step is to create a plan and then purchase the appropriate product. The only exception to taking the time to create a plan is when there is a gap that could be devastating to you or your family. For example, you don't have adequate disability insurance, maybe medical insurance, life insurance, or long-term care. Now, that said, I want you to be working with a fiduciary, because a fiduciary is not just going to be selling you life insurance or disability insurance or some product. They're going to really be looking at it from a bigger picture and looking at it from your best interest. That is absolutely critical, because if you're just buying something from somebody who's just trying to sell you something, they're not looking at it from a fiduciary duty. And oftentimes what you find there is you have the wrong type of insurance, or you have too much insurance, something along those lines. What I typically see more than too much insurance is that you really need, let's say, $2 million and you can't afford it. But they instead sell you like a whole life policy, which is much more expensive. That's not ideal. You need the coverage you need. And if you can only afford term, you should buy term. So it's something to be aware of and something to really pay attention to. By creating a plan and understanding your options, you're going to naturally reduce stress and overwhelm. And that should be the most important priority, because what good is having money if you're in a constant state of stress or worry or fear? Nothing good comes from that. All right, before I let you go, as I mentioned, we're creating our all new money course, and I want this to be the best available money program in the market. To do that, I need your help. I want your input. So if you're willing to share your input on what you'd like to see in there and how it can be the absolute best, I encourage you to go to themillionaireinsider.com/MCI. The money course teaches you how to evaluate options like this, do things so that you're in a calm state of mind, so you're not feeling pressured, and you understand why you're doing something. That's absolutely critical. It also is going to be the framework for you creating a financial plan and a financial strategy, along with a retirement and tax plan. So again, you can go to themillionaireinsider.com/MCI to give us insight on the money course. I want to thank you so much for joining us for our RILA discussion. If you have any questions on a RILA and want to determine if it is right for you, you can go to themillionaireinsider.com/support. This is Annette Ba'u. All international copyrights are reserved. Bye for now.